Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our guests on the show. Joining us today are Vineeta Sharma of Narnolia Financial Advisors, Avinash Gorakshakar of Joindre Capital, and T.S. Harihar of HRBV Client Solution. Many thanks to all of my guests. Today on Hot Money, we'll discuss IRB Infra and whether the prospects of them losing the Mumbai-Pune expressway is something that is a matter of concern. The counter was down almost 10% in trade yesterday. Bharat Forge has seen multiple downgrades. The counter has been rather weak over the past few days. Brokerage firms are expecting simultaneous slowdown in the key segments. We discuss whether it's a good time to start accumulating the counter or no. And we also discuss counters like UPL, which is down almost 10% in trade today. It was down another 6% in trade yesterday, given a lot of concerns as far as their business is concerned and trade was a concern. And finally, PI Industries, that stock is up 50% over the last 1 year. We discuss what's fueling the rally in the stock. So that's something that we will discuss in today's edition of Hot Money. But let's start with the first one, and that is IRB Infra. Now, the counter was down 10%, more than 10% in trade yesterday, has managed to fall down even in trade today, given the fact that August 9th will be the last day that they will operate the Mumbai-Pune expressway. There's no communication that they've heard from the government yet what will happen, but obviously when the rebidding happens, it will happen at a higher price. But what's the view? Do they have the balance sheet to buy out this to actually bid for this project again, or what does this project loss mean for them? Hari, what's your sense on IRB? It's corrected significantly. The concerns are them losing the Mumbai-Pune expressway. They have said, we spoke to them, they've said that they will go ahead and rebid, but do they have the balance sheet strength? And if they don't, what happens next?
See, prima facie, IRB may not have the balance sheet strength, but I think IRB InvIT could have the balance sheet strength. InvIT did raise about 4,000 crores, so they could probably structure a deal where they take it over on the IRB books and then hive it off to InvIT. So that kind of a structure is totally possible. I'm not sure whether, what is the thought process of the government, what is the price at which they're looking at the rebidding. I think those things are not too clear. But apparently it is going to be at a fairly large premium to what they're doing right now. So I think even if they do get it, it's going to be a big capital cost. It's also going to be a much higher, cost payout to the government as far as IRB is concerned. There have been also concerns as far as IRB's numbers are concerned. If you look at the last quarter, I think the operating margin was down by about 8.7%. I think the profits were down about 13%. So I don't think that has been very good. If you look at the sentiments in the market, I think 5-year low is what the stock has just touched. So overall, I think sentiments are negative, the numbers are negative. So probably our suggestion is that until you get a clarity on what is going to happen post August 9th, we would stay off the stock. The price looks attractive, but I think till there is clarity on the Mumbai-Pune Expressway, we would probably stay off the stock.
Okay, Vineeta, what's your sense on this project and the company?
So I totally agree with what Harihar said, and I would recommend people to stay neutral or stay out of the company. Optically, if you look at the numbers and the valuation, it looks attractive. And but considering this tollway getting away from IRB, that would cause some, profit would get half next year. Also, the order book that they have right now, so that is around 11,000 crore, and they haven't had any big orders in the pipeline. So nothing they have won in the past 2-3 quarters. Also, there were 3 projects for which financial closure was done, but there was no appointment date received. So 2 of them are still pending. So going forward, if this tollway gets away from the company, obviously it will hamper the top line, which right now it is around 14% alone from this tollway, and the bottom line also, considering the it's a good margin because the interest costs are not there. It's a debt-free project. So overall, but then this news is not something new. It has been there, and we know that this was supposed to happen. So considering that the way prices have come down, it looks attractive. But then I think we should wait and watch, because the IRB has some 2,500 crore of more equity requirement going forward, and this tollway being a cash generating business was giving a lot of comfort to the company. Now that going on, how the company will be faring out will be a concern, definitely.
Okay, what's your sense, Avinash, on IRB Infra?
I think, Darshan, clearly, this is going to be a short-term negative because, as rightly pointed out, I think they have a immediate requirement of 2,500 crore of equity, and raising equity in these markets would be a quite a Herculean task. And more importantly, there have been a lot of corporate governance issues also. So despite the fact that the numbers give a fair amount of comfort on the valuation, I think it would be wise enough to at least stay away from the counter for some more time, considering the fact that a cash flow generating project is now out of the bag, and clearly new projects have not yet come in. So I would believe that despite valuations being attractive, I think it's better to wait and watch at least for 1 or 2 quarters.
Okay, so I think wait and watch is something that we need to watch out for in IRB Infra. Remember, they had paid a premium of 980 crores when they had bagged the project. ET yesterday had reported that the government was anywhere between 7,000 to 8,000 crores for this project, and IRB Infra has already levered twice on the net debt to equity ratio. So that's the view that's coming in on IRB Infra. The second counter is again a counter which is trading at 52-week low. Multiple downgrades coming in on Bharat Forge, and the reason they've said is that there is concern on the three aspects that they work on: the industrial aspect, the domestic auto market, and the export truck market. So there seems to be concern. Are you concerned about Bharat Forge already trading at a 52-week low? So is it the right time to start accumulating, or you believe that there could be more potential downside? You'll have Vineeta, this stock under active coverage.
So this is not under full coverage, but we do track this company, and Bharat Forge, I would recommend people to get in and start accumulating this stock. The two reasons: one is the management pedigree. They have seen cycles. This is not the first downward cycle that they are seeing. They have seen it earlier, and they have changed the model also accordingly, and they have come out better in the consequent years. Plus, definitely there are concerns on the key businesses like the PV sales or because of the BS6 norms. But then management is counting that they will improve on the ticket size of sales post BS6. Plus, class 8 trucks, that is going on a downturn. But the good point is that, Darshan, that the company is also doing some defense projects, and there we see as things go by, I'm very hopeful that there should be good orders in defense going forward, and that should be because in the last 1 year they had some capacity constraints in aerospace, and for which they had to lose some market share also. But then the company has addressed to it, and going forward they are expecting a better market share, and given the given government's thrust on the budget in defense going forward, I think it should fare out well. So valuations also are at very low. So its valuations have halved. So from 7 times price to book, there is around 3.5 times price to book. I think somebody who wants to have a long-term bet on industrials and auto. So this is a good combination. So there is no harm in accumulating in the stock.
Okay, Avinash, what's your sense on Bharat Forge? Have you told your clients to accumulate? What have you told them?
In fact, our sense is, we have been telling our clients to actually hold on, not add on to fresh positions, considering the fact that, fourth quarter, if you take out the forex gains, EBITDA margins were not as high as what the market perceived, and most importantly, the kind of downturn we have seen in the domestic CV as well as in the passenger vehicle markets. I would not be surprised that the first half of FY20 may be a really bad quarter for them. Although long-term prospects, I do agree, definitely look attractive, considering that aerospace and defense are pockets where growth is going to come in a much stronger number. But overall, within the overall revenue size, these two pockets of opportunity are still pretty small. I would believe that one could probably wait for some more time to start nibbling in the counter. Maybe I would wait for maybe 1 or 2 quarters, but definitely at lower levels I would definitely start nibbling.
Okay, what's your sense, Harihar? Would you also be accumulate this stock, or are you still concerned about what's happening?
No, actually, we have been concerned in the recent past. It used to be one of our favorites as far as the auto ancillary space is concerned. But I think in the last few, I would say probably quarters, we've been a little concerned for a variety of reasons. Look at its biggest market, which is the Class 8 trucks in the US. Now, that if you look on a YOY basis, the demand is down about 65 to 70%. Now, that is huge. I think getting back to the old levels is going to be very, very tough as far as the Class 8 is concerned. And Class 8 accounts for almost 25% of its overall business. So I think that is something that's going to have a real impact. Domestic business, yes, I think we all know what's happening in auto. I think in YOY sales are down about 22%. So I think that is impacting Bharat Forge. The only good thing I see, of course, other than the defense and aerospace, which Avinash mentioned, is that there is a fairly large EV franchise they're building, because they're already betting that there's going to be a big shift to electric vehicles in the next 10 years, and they are building a very strong EV franchise. But I think that would take at least 3 or 4 years to really start generating something worthwhile. So right now we would continue to be neutral as far as Bharat Forge is concerned.
Okay, so not the best of the views that are coming in on Bharat Forge. No fresh buy, but hold on if you have that side of position on the count. The next stock we want to talk about pretty much will be the stock of day. UPL again today has corrected 10%. It was down 6% in trade yesterday. No one knows what could be the reason, but one of the reasons that happened today was this HSBC note where they spoke about two things: the trade war as well as the impact of the swine flu that's going on in Africa, which is both impacting soybean consumption and in Brazil, and that probably is impacting UPL. I don't know whether this note alone could lead to a 10% fall, but nevertheless the counter is down in trade today. What's your sense, Avinash? At almost 860, it was almost 1100 at one point of time. Is it a good opportunity to accumulate, or are you concerned with the sharp fall that we have seen?
No, in fact, Darshan, we have been telling our clients to actually accumulate the stock on every decline, in spite of the fact that after the Arista acquisition, debt had increased significantly on the balance sheet. But if you look at the overall performance on basis of top line, EBITDA, plus the kind of commentary which the management gave at the recent analyst meet, I think the management sounded pretty confident. They are confident of even repaying debt to the extent of almost 3 to 3,500 crores in the coming financial years. Cash generation is expected to be good, of course, with the caveat that if there is a swine flu problem in South Africa affecting Brazil, which is one of their key markets, then maybe in the near term the stock could see a little bit of pressure. But our sense is that this is a company which has got a large product base, a very large opportunity by virtue of their acquisition. So I think probably I would buy into this weakness for a longer term kind of opportunity. Maybe in the near term it could underperform.
Now, are you aware of what's happening? Because it's down almost 16-17% in the past 2 days.
I think, Darshan, the bigger worry is most of these highly, high debt companies, for the Arista acquisition, if you see the debt which was taken, I think that was one of the key worries, because obviously if, markets where Arista caters, those markets are typically European and Brazilian markets. So, if there is a problem there, that could possibly impact the debt servicing capacity, at least in the near term. So probably that is the reason the markets are a little worried that this kind of fall has come in.
Are you aware of what, apart from the HSBC note, which I think people read, are you aware of anything that's happened in UPL that would lead to such a fall?
So I'm not aware of why UPL has fallen, but particularly on UPL, I can only say that it's a very complex company and marked by lot of cyclicals in different countries. Also, what Avinash was saying, it's a huge debt company right now, and debt has been taken into 5 currencies. So if you look at the US debt, it is around 30%. In Euro, they have some 40% debt, some 9% in Japanese yen. So there are many countries, many currencies involved. Secondly, it depends on a lot of weather conditions, as you pointed out, swine flu, etc. So what goes wrong into what country, it's difficult for me to analyze UPL. Particularly if we look at Arista acquisition, the top line would go double, but then because of the debt that they have taken, the bottom line will not grow that much. The ROE has deteriorated from 22%, is expected to deteriorate to 11%. So, and the valuations at that current price, the valuations have almost doubled if you consider that. So on a ROE, price to book, ROE, P, I'm not very comfortable with what UPL stands right now.
Do you all have coverage on UPL as such?
No, we do not have active coverage. I'm not tracking UPL.
Okay, but just Avinash, coming back to you, the Arista debt and all was taken a long time back, and post that the market did manage to cheer it. They liked what they saw, and the counter did manage, but all of a sudden there seems to be an issue with UPL. So do you think that it could only be due to debt?
I think, if there is a problem with Brazil or maybe the South African markets, globally, I think United Phosphorus, UPL is a large company which has got a large exposure. Domestic sales may not be the near-term trigger for them. So anything negative happens on the global front, Darshan, could be a bigger negative surprise. And I think you could probably see this happening maybe from the second quarter of FY20. Maybe the first quarter you may not see that impact. But hopefully, if this happens, then I think probably, the stock is obviously giving you some signal.
Okay, that's the sense. What's your sense, Hari? What did you make of this?
I think the correction we saw in the last 2 days has probably less to do with Arista and more to do with what they call the spreading of the trade war across Latin America. Now, what's happening in America right now is that there is already an agreement between Canada, Mexico, and US, which is part of the NAFTA agreement. Now, what they are planning is to expand this to the entire Latin American region. There's already a Latin American trade union that exists. They are expanding that to Latin American union and forcing them to put higher tariffs on all goods exported from China and India. So I think if that happens, the fear is that UPL could be a big loser because they have a very, very large Brazilian market. So that is, I think, what is probably, I'm not sure, but I think that is what is probably spooking the stock. My hunch is it really may not happen in practice, but I think the fear is probably taking the stock down. See, we have liked the stock. We have always believed that Arista is going to be cash accretive in the medium to long run. So I don't think we have too many concerns on that front. I do agree with what Vineeta said about multiple currency issues, but I think that's more of a currency risk and may not be too substantial. But I think it is probably the short term. They're more worried about nobody knows what Trump is going to tweet next. So I think that is probably a bigger concern that is on this issue, and that is probably what is spooking the stock. But I think with the stock down about 20% from peak levels, I think it's probably a good level to buy the stock. I don't think I would worry too much about buying the stock at these levels.
Okay, I just wanted to reiterate what the HSBC note said. They say that the impact of trade tension is manifesting for soybean in 2019, and because of this they believe that soybean demand and pricing is likely to be under pressure. So that's the first reason. And the second reason, which was actually for the African swine flu, what they say is that there could be a 30% reduction in pork production in China, which could lower soybean demand, which is the raw material used as for food for the pigs there. So that is something that they have highlighted clearly. But UPL is down 9% in trade today. So extreme weakness coming in. And the last stock we want to talk about, again staying with the chemicals space, PI Industries. That's one counter which has managed to rally significantly, almost trading near record highs. It's down in today's trade, but it's up 50% in this year. What's working for PI Industries, Hari?
See, I think again, it's the whole story about union budget coming, another push for agrochemicals. But I was just watching the interview with the chairman of PI Industries the other day, and I think he pointed out 2 or 3 things very interesting. The first thing was that if the monsoon gets delayed, as it already has been, his logic was that there could be a big contraction in demand because sowing gets delayed, then the demand for agrochemicals get delayed. So there could be a big constraint as far as demand is concerned. I'm not sure why the market is not factoring that in, but I think that could be a very, very real risk. So if you look at valuations, I think it's about 40 times earnings, which is at par with most of the agrochem companies. So valuations are not a concern, but I think a delayed monsoon, a delayed sowing season could be a big concern. So I think considering that it's already reached a new high, we would be a little cautious on PI Industries at these prices.
Okay, what's your sense, Vineeta, on PI Industries?
So PI Industry, if we consider some look back some 10-12 years, PI Industries has really done phenomenally well, and it was growing around, every 4 years the sales were doubling, PAT has doubled accordingly, margins have grown up. But in the last 2 to 3 years, say from 16 to 18, it was going through a rough patch because the products that they had, so there is always a lag because it goes into manufacturing, and then, there is a small testing phase of the product, then 1 year, and then it takes 3 years to take a proper scaling up of the product. So they have commercialized 2 to 3 products, and FY19, if we look at from last 3 quarters, the company has done phenomenally well in the top line as well as bottom line. Plus, they have changed the sourcing of raw material because some 35% of the raw material was sourced from China. So they have, because of supply disruption, etc., they have done some backward integration also. They have cushioned their margins front. The product mix on the agri business, on the branded product that they have for India. So there also they have launched 2 to 3 products, and because of the, once a new product comes, it comes with a better margin. So there also margins have increased. Agri business, in particularly India, might be a little slow, but considering the CSM business, they have a good pipeline and products are getting commercialized, and there the order book is also fairly high. So I think the top line, bottom line is expected to be good for the next 2 years for PI. And but on the valuations, I'm not very comfortable in the sense that it has reached its almost all-time high valuation. So 6-7 times price to book on a forward basis, I think is what PI should command. And with the 18 and 17-18, they have lost on ROE front also because the PAT growth was too low. So moment the ROE catches up, I think this valuation will be fairly high for the company. So on the I think it's a good company to stay on. It has gone through turbulences and recovered. It's a good company, but not to accumulate at this level.
Okay.
At 52-week high at the current market juncture, I would ask people to stay away from adding it.
Okay, that's the second view that's coming in, that at valuations appear expensive at this point of time. Avinash, similar thought, or what's your sense?
No, I think valuations definitely appear to be expensive, but I think one key factor for the interest in the stock has been the CSM business. I think the management clearly has hinted that domestic market for agrochemicals is definitely going to be challenging considering the kind of slower monsoon. But the CSM business has got a very strong order book, a very strong pipeline of products, and most importantly, the kind of capex also which is being put is largely going to be meant for the CSM business. So I think clearly, I would wait for the stock to correct, Darshan. It's a great company. It's a net debt free company. I think very little debt on the balance sheet on a net debt basis. So I think one should wait for a correction rather than getting into stock at the current levels.
Okay, I think it's a consensus view, even though everyone likes the company. Valuations and price move that we've seen is deterring our experts from taking any kind of positions on the counter. But with that, it's a wrap on today's edition of Hot Money. Let me thank my guests who've come in today for the show. Thank you so much, Hari, Vineeta, Avinash. Thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.